So it's the very first NFP of the year, obviously. So we're just 6 days into the new year. So the year just started, even though not with the best feelings, I will say. But nonetheless, it is the first, the very first NFP, and it will help us clarify the approach of the actual the approach of the Fed, sorry, in the year ahead. So let's wait and see. Let's wait and see. So I will explain in a bit what I actually mean. But NFP, it's crucial, guys. Hello, Gombese. You started a bit sharp with the dollar yen. Yes, we will see everything together. Okay, I have a dollar index over here with me. But first of all, before we go through the charts, okay, because we're just a breath away from the NFP release, okay, guys, and this is why we are doing this webinar, this live streaming right now, is because it's the NFP. So let me go through what is expected and what will happen if we the data miss expectations. Okay, so okay, pushes down the very first NFP of the year. As I just show, this is the daily chart for dollar index. Okay, as you can see, I have put a blue line over here connecting the tails. So it's been to downtrend, obviously, for a long, not long time, but since the September's peak. I mean the dollar index. If I zoom in, we have a nice smooth pullback decline. So let me just put it, I don't know why it's with yellow. I will change it right now. Okay, we'll change it right now. Just give me a sec while I'm putting a regression channel on, just to show you it has been in a down channel since the beginning of November. That channel broken yesterday. Okay, dollar appreciated, boosted higher, breaking the 50-day moving average, exiting the channel, and it keeps rising today as well. So this is the daily chart. If I zoom in, you will see that it keeps appreciating today. Why is that? First of all, we are waiting for NFP, right? But I don't know how many of you were here or they are watching our articles, what we post online in Facebook, social media, or they have been in the live analysis on Wednesday. But we had seen ADP number yesterday. Okay, ADP is a nice signal. It tends to be a nice signal for what is coming in regards to the NFP. But also, let me just, I want to share the calendar with you. Just give me a second. I know you keep asking about analyzing some assets. Give me some time, because I really need to explain the data, and we need to see together the NFP. So NFP, we're just 5 minutes away from the NFP. Okay, so what we had yesterday and why dollar appreciated is because of the ADP, okay, over here, and jobless claims. So what we've seen yesterday is a pretty strong reading. Can you see that? ADP employment change, double of what was expected and what we had last month, double than last month, and nearly double than what was expected. So that implies to a really strong labor market, Jobless claims detected than last week. Okay, what that shows, you can say, but Andrea, for a country to have a really strong labor market, that's good. No, in this case, it's not. Why? Because it means that regardless of what the Fed is doing, it doesn't cool down a bit the labor market. So that is adding to further rise in inflation. Okay, the solid market, the solid labor market implies to a higher inflation, and that could cause the Fed, could push the Fed to increase interest rates higher. And it's not only that, it's also the manufacturing ISM PMIs that we have seen on Wednesday. They missed expectations indeed. They came slightly lower, but not significantly. So, sorry. So this mixed sign that we are having in regards to a bit of a slowdown in manufacturing. On the flip side, a really strong labor market is something that implies that the Fed needs to take further action. So, why did I do that? Why did I do that? I want to share again the calendar because I want us to see together the numbers. So we're expecting 200,000 non-farm payrolls. Okay, so lower than than November. Average hourly earnings are expected to increase to detect slightly. Unemployment to remain unsteady. Okay, this is what is expected. I will not stop sharing for now until we have the data out. And just to brief you up a bit, that and in line. So if we have a surprise today, if we have a bit of expectations once again, that's something that will push the dollar higher, that could push the dollar higher, push the treasury yields higher, and proceed with further sell-off in the stock market. So I will bring back dollar. Okay, this is the hourly chart. We'll go down to the 30 minutes chart, guys. This is the dollar 30 minutes chart. Okay, because I want to see the reaction once the data are out. Down to the you're doing gold. Okay, so what I was ready to say, I'm confused a bit right now. So okay, the data there, we're less than a minute before the data are out, but an increase, I'm saying, is something that suggests more jobs, that implies to further interest rate hikes from the Fed. So that could push dollar. Yeah, okay. You can see the chart. There's a way to see the data as well. Let me just share the whole window because I want to have side by side the data. Good. Yes. Okay, perfect. Let's see. Oh God, it's dropping. Is it ahead of the data? Is it some kind of a push? Buying the dip situation over here. Okay, data out, guys. Dollar is a bit lower, but it was a bit lower on the data release. Let's see. So let's read a bit the numbers over here. Hourly earnings detected, miss expectations. So what that means, it means that people are getting paid less. Okay, average hourly earnings in the yearly basis. Oh, sorry, this is the headline. So the headline has detected. What about the monthly reading? Where is the monthly reading? 0.3 indeed detected and revised lower. So it means that people are getting paid less. Okay, that's negative for the US economy. Non-farm payrolls 223 beat expectations, came lower than last month, revised lower as well. So indeed we have 223,000 new jobs, and beating expectation, but we have a revision lower. Okay, we have a slight detection, but that's still positive. Labor force participation rate beat expectations, unemployment lower. So regardless of the fact that hourly earnings detected, we still see that the labor market is not cooling off. It's not cooling. No, it's not. It's still strong, regardless of the fact that the Fed has done lots, has proceeded to how many points? 300, 400 points interest rate increase. So that's still a solid labor market overall, with the only exception the fact that the hourly earnings detacted slightly, revised slightly lower, implying to a bit of a less earnings, a bit of a deduction to the earnings, to the salaries of the people. So that's positive. So that should push the dollar higher. So let's see. This is the first reaction on the data. Theoretically wise, just theoretically, based on the history, the reaction, the fundamentals, that should support, as I said, the dollar. The very first impression is that ahead of the data and ahead of the release, the dollar was pushed lower to 104.89. But that's a good reading. That implies that adds further pressure to the Fed, as I said, to increase rates. So, and considering the really hawkish comments this week, so really hawkish comments, strong labor market, the fact that it remains strong regardless of the hourly earnings, that implies that inflation will remain high. Okay, so yeah, more interest rate hikes. Goldman Sachs, I was reading that Goldman Sachs pushed their forecast, and they now anticipate the Fed to proceed to increase rates up to 5.4%. 5.4. So the Fed's hikes so far have helped to bring down inflation slightly, really slight, just a bit. So they need to do more. Rates need to be higher for longer to keep downwards pressure on prices, to bring labor market a bit cooler. And I mean, nearly all the hawkish members are believing that that it would be a terrible idea if the Fed change approach. Okay, so they are really big supporters of the aggressive for longer, higher for longer. So yeah. Okay, let's wait a bit for the market to cool down a bit, to calm a bit. You know that NFP is one of the most volatile assets, volatile releases of the whole month. And that's why every single time we're seeing this kind of ups and downs, jumps and drifts, because of the volatility that this figure tends to present. Now, I'm going to shift to your questions. Okay, and if you need, they close my order. So so you are trading the news, and I guess you're buying the news, and I guess that might not be wrong, my dear Bongani, but it seems that you have your stop loss quite close, without considering that NFP is a really volatile asset. So during the release, it's going like that, bam, 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 bam. So that's why you need to do an appropriate risk management. So you have your stop loss most probably really tight, right? Really close. It's not wrong to trade the news, guys, okay? But especially if it's the case of NFP, which is a very volatile asset, you need to set your stop loss at a reasonable level, because due to the volatility, the direction that you choose might be correct, but because of the volatility, it kick your stop loss. You have put your stop loss quite close. It kick your stop loss before turning back into your direction. Do you get what I mean? Are you okay, Bojani? Sorry. So first come, first serve, as usual. So I'm going back and going to the CISO requested ages ago. So dollar yen, okay, dollar yen. It would be more helpful for me if you telling me also the preferable time frame that you want me to analyze, but I will do as what I usually do, taking the daily and going down to the 1 hour. So starting with the daily, dollar yen remains to the downside, okay? And I would like to zoom out a bit because this gray yellow line that I have put last week was it, or before we go for holidays? I think it was yeah, before Christmas holidays. It was it's a significant floor that we have seen holding for um, 7 months, nearly 7 months. So you can see that since June last year, the dollar yen has reverted all the gains, turning back below this 200-day moving average, below 50-day moving average, and however holding the a key floor, which is this key floor that I'm saying. This key floor, which I'm referring to, sorry, okay, the key floor that I'm referring to is the 130 territory. 130, 130, double zero number, round number, key psychological level, a floor that has been held since June last year, and it keeps retesting it. It retested it several times in December, and it keeps, so you see, retested it in the mid of December, retested it at the end of December. It bounced higher. Let me zoom in. It bounced higher this week, but that doesn't change from the time being the fact that it's still at the low territory of this 3 months drift, okay, below the 200-day moving average, below the 20-day moving average, and with the momentum being aggressively downwards. So the outlook doesn't change. Dollar yen remains in the downside, in downside pressure. From the from fundamental perspective, okay, let's not forget that it's a safe haven, right? So, in times of uncertainty, this is something we've seen the dollar yen appreciate. But the huge gap between Bank of Japan and Fed, okay, imply that we should have a really weak yen and a really strong dollar. But what we have seen the last 3 months is the quite opposite. Yen getting stronger and dollar getting weaker. I mean, if we compare the two, okay, don't misunderstand and don't confuse. Dollar, it remains the strongest currency of all. But because the Japanese bank tried to support its economy, to support its currency with some interventions in regards to the government bonds, that helped the yen gaining ground against the dollar. So, but based on the fact that the 2023 is expected to be another strong year for dollar, based on the fundamentals, on what the banks are expected to see, on the global recession, energy crisis, continuation of the war in Ukraine, and etc. The dollar yen is expected to recover, but we cannot see that for now. The fact, this confluence, my dear Sibusiso, this clash over here, 200-day moving average with the 23.6 Fibonacci level, is our very first level of interest. Because if the asset managed to break it and start extending higher, that will give us a sign that maybe this 3 months decline starts to fade. It's not a confirmation for taking a long position, but it's the could be a very first sign that this decline could run out of steam. Okay, if we see a break of 200-day moving average and to head higher above it. A confirmation that this is running out of steam, it will be a return back above the 138 level, along with our RSI on MACD turning positive. Okay, so only a move above 138 could turn the attention to 140, 141, 143. Okay, so to these two November highs. So here, only that. For now, the fact that we are seeing tumbling between 130 and 135, unable to extend higher, with MACD being really, really negative, bearish bias, increasing bearish bias, that implies that this level is a retracement level with expectations to be on a pullback to the downside again as soon as we see the price turning below 133. Okay, is that clear? Let's get down to the 1 hour chart and see what the intraday basis is telling us. So down 133.75, 100 pips lower already just with the release of the NFP. So MACD indicators over here. So sorry, let me just put the intraday basis, the 5 and 9. Sorry. Here we are. Okay. Fast moving average are ready to bearishly cross, but they haven't confirmed a cross yet. So that's not the case yet. But RSI points lower, MACD detached. Stochastic have posted a bearish cross. Can you see that? So it already turned below 20-period moving average. So the next level to be watched will be the bottom of our Bollingers, my dear friends, at 133. 133, the next support level for dollar yen. A break of the round 103, 133. Just let me round it up. A break of 133, which is our immediate support level, could bring back into attention let me just check something. Bravo, excellent. So the double fractals over here. Yeah, perfect. 135.50 is the next support in case that the asset turns below 133 with negative bias increasing. Okay. Okay, that's it. Yeah, pretty bearish stochastic RSI. Wait a minute. Yeah, RSI already below 50 and dropping. Can you see that? MACD is still negative, but it has a tad lower bearish stochastic. So that might be a limited downwards pressure, but it's a big candle. So floor at 133. If that breaks, next floor at 130, 150. Okay, the fact that MACD is still positive gives me the impression that it could drift lower, but it could hold. It could be something like a limited decline. Okay. Gold, of course, as usual. Most of you are asking about gold. Of course. Oh, okay. Gold. Let's start with daily chart. Oh, actually, let's start with the 1 hour chart because obviously on the release. Okay, let's see how. Let me just. Yeah, keeps decline. Let me just see whether I missed something. I think there is a misunderstanding from the markets in regards to the data. Sorry. me check something, guys, just to make sure that there's nothing else that is going on and I didn't spot it. Guys, just to clarify something, okay, I don't know whether you are asking me already and I missed your question, but ooh, there are a lot of comments. Okay, okay. It seems that the market is either, how can I say that? Okay. The decline, okay, of the dollar. I'm back to dollar, okay. Why I'm back to dollar? Because I want to explain a bit what's going on over here. Why is it decline? Why we see a decline? The decline is not in line with the data. The data were strong. The data still present a solid market, a solid labor market. The fact that the dollar is drifting shows only that markets right now are really focused on the lower earnings, hourly earnings, rather than the overall picture. So this looks to be just a very short-term reaction, because as soon as the market are come down a bit and consider that we have a solid labor market, so Fed, that means that Fed could continue to increase interest rates, then that is something that could put a floor on the dollar and help the dollar next week. So what I'm seeing over here is either taking some profit out because it's Friday, or something like pushing the dollar lower in order to get prepared for next week's trading. Okay, that smells like a taking a profit situation, because it doesn't come in line with the data. Okay, the data, based on the data implied to a strong dollar. So this drift, it might be just taking profit, closing positions ahead of the weekend in order to push the dollar lower. So but why? Okay, so let's get back to gold. Gold jump, we have a reversal in dollars, so that boosted gold higher. So breaking this immediate resistance, and we have a double top at 1840, boom, bounce outside Bollinger's. MACD is still negative though, it's still neutral. 66 is the RSI. Okay. Let me just draw my usual regression channel over here. So rebounded, okay, rebounded away from the midline of the channel, ready to recover all the losses that we get yesterday. Overall momentum is positive, so the overall picture for gold holds to the upside, and the fact that we have seen this bullish cross of fast moving of 50 and 200-day moving average, this bullish cross, this so-called gold cross, implies that the uptrend continues since we've seen this sharp rebound away from the midline and back to 1850. So overall outlook remains positive. Now, in regards to the intraday setup, it was definitely a big candle, but we have another 9 minutes until it's closed. So yeah, it looks a bit overbought. Sorry, it looks overbought. So it needs a correction. It needs a correction. It's outside Bollinger's. So yeah, we might see, if indeed it closed like that, we may see some sideways movement, some consolidation, because it's overbought. So it needs to come down. It needs to ease a bit. So yeah, let's be patient for another 8 minutes until this candle closes before you take any decision, my dear friends, okay? Because it's overbought. It's overbought. So it might need to cool down a bit. It might need to go a bit sideways before another attempt to the upside. Next resistance, however, is Monday's highs. If it hold gains, next resistance. Okay, zoom out a bit. Next resistance is the 1860 territory. Okay, 1860, but it's overbought. So I'm highlighting that. Wait to see whether it will hold gains or not. Okay. From Africa, Hassan, welcome. Gold. Ooh, somebody saying sell. Yeah. Dollar. Okay. Nasdaq. That's the daily chart. That's the 1 hour chart. Let's see that. Let's go over here. Okay, so what we're having, this is the 1 hour chart. Come on. It's a 1 hour chart. We'll zoom out a bit. Sorry. Push. Pick up to the 200 period moving average and the 11,000 actually. 11,000 is a level that you should have a note on. So here is 11,000. Come on. Here we are. 11,000. That's for Nasdaq over here. Push higher, but that's just the data, guys. That's just the how can I say that? A volatility. The stocks, it's a recession. We have recession, we have global recession. Considering interest rate hikes globally, considering global recession, considering uncertainty in China, considering the fact that we have already seen corporate earnings showing weakness, the stock market is unlikely to recover anytime soon. Okay, we had a bounce because it seems that the market participants are really focused on the earnings, on the midst of the hourly earnings than the overall strong, solid labor market, but that looks to be a limited thing. So 11,000 remains the resistance of the day for Nasdaq, but MACD is well below zero. There is no indication that will turn positive anytime soon. So that looks to be just a limited bounce before we see the asset turning back down again. Okay, so let me put the daily chart on just to show you that this is a daily chart. Okay, look at the outlook. Look at that. So turn down to 2022 floor, right, to the bottom 2022, bearish cross between the 20 and the 50-day moving average, and they keep expanding. MACD keep rising lower, right? Bollingers keep extending lower, pointing lower, 200 points lower, 20 points lower, 50 points lower. It's just a negative outlook for stocks in general, not only for the S&P 5, for the Nasdaq, okay? Especially have in mind that next week the earnings season is coming, so we have disappointing earnings season that could add further pressure to the S&P 5, to the stocks in general and to the Nasdaq. So Yeah, floor remains there. So 11,000 to the upside is the resistance, and 10,750 is the bottom. A break of either of the two levels will indicate the next direction, but since the technicals and the fundamentals suggest further pressure, then it's the outlook for Nasdaq is negative. So a break of this floor could open the doors to 10,580, or even better, to the bottom that we have seen in October, which is at 10,477. Look, negative here at 41, failing to move above 50 since early December. So negative, 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 lots of negative signals, and fundamentally and technically. Euro dollar, the most famous asset of all times. Okay, I have a poor price action over here. Why is that? Because I wanted to show that M. This M. This M formation. Oops. So I wanted to show this M, as I said, formation, because this is sorry. Okay, this tends to be, theoretically at least, a bearish pattern. Okay, so look at that. This is a bearish. This is called M formation. Okay, so with neckline at the bottom of the M here. Okay, let me get rid of this green. Okay, oops. This is a pattern, a candlestick pattern, which suggests that is a bearish. It presents a bearish signal if the asset breaks the neckline. The neckline is at 105.62. Okay, so M, bearish pattern, and which suggests that if the neckline is broken, then further pressure will be added with next support level. Okay, on the we need to measure the distance between the peak until the neckline. So this pattern implies that the price is projected to drift to 103, 104, 103.91. Okay, this is a candlestick pattern. Okay, this is a candlestick pattern that says that if the asset forms an M formation, otherwise known as this is not Cartney. I think it's known as M. Like we have M, we have W, we have Cartley, bullish Cartley, bearish Cartley, and etc. So this is a pattern that says that if the asset turns down, breaking the neckline is here, and extending further lower, it could turn as low as the distance from the neckline to the top. So you have seen that I have measured the top until the neckline, and I drag and drop my box to find out the where the price could go next. Okay, it's like a double top formation, right? Like a double top formation. So now let's put some indicators on to see whether they agree with this signal, with this pattern. So we'll use my usual MACD. Okay, And my RSI as usual for the daily chart. This is the daily chart, by the way, guys, okay? Daily. Okay, so indeed, MACD is detecting, is below is below signal line and keeps going lower and lower. That suggests to an increase of the bears. More bears, less bulls. RSI is at 50 and consolidating 50. 50, 50, 50, 50. Come on, here we are 50. So a confirmed decline of RSI below 50, pointing lower. A further deterioration of the MACD could confirm what I have just said. Okay, now that was the daily chart. Let's go to the 1 hour chart. And let me use my intraday basis. Here we are. What we are seeing is the jump, but look at that. It jumped indeed, but it already stuck. It failed to break the Bollingers. The Bollingers flattened. The next candle it didn't break the previous high. MACD is negative. RSI already flattened, indicating that this bounce was limited. So it's what I said earlier, guys, that indeed, even though the dollar index, it was in a sell-off because the market seemed that they were like focusing on the hourly earnings rather than the overall picture. However, that was just the volatility to push the price lower, because overall the signal that we're getting from the today's NFP is that the Fed will increase rates, so that theoretically push the dollar higher. So now where you should focus on is to see whether this floor will be held, because this floor is held and we start seeing a recovery, then as soon as the asset comes up, the dollar index comes up, recovering 50% of these losses. So as soon as it comes back above 105, then that would be an indication that it could continue its upwards rise. Okay, so if we see that, it could retest a bit this level before another attempt to the upside. So you need to wait to see whether we found the floor, and as soon as it confirms a breakout of 105, then that could suggest to further rise for dollar. But that's a lot of ifs and ifs and ifs. You need to see that in practice. You need to see that happening. Now, where was it? I was in euro dollar. Yes, so intraday. It didn't bounce, but steady. So let me put the 30 minutes chart. You see, bounce but steady. Hasn't pushed a new high. MACD remains negative. RSI flattened, even though it's at 63 but flat. Stochastic crossed at 80, but the slow line is still well below 80. So that suggests limited bounce. Ceiling. This is a ceiling, guys. This is a ceiling. You see, flat Bollingers, flat moving averages, negative MACD, flat RSI, all imply to a potential consolidation and even a turn back lower again. So wait to see. Must I give you a We've seen gold, we've seen gold, we've seen gold, we've seen gold. Have we finished gold? Yes, we did, right? I said once 1860 is the next level to be seen. Next floor at 1840. Actually, it's good for you if you put this regression channel like I did. This is gold, guys, okay? This is gold. This regression channel that I put in the daily chart, because you will be aware when the gold will turn into the lower area of the channel, or whether it's in the upwards area and it keeps rising. And every time that the asset retests the top line of the channel, okay, we might see a small retracement back to the midline or even to the lower line. And every time that is retesting the bottom of the channel, we could see a bounce higher again. Okay, have this in mind. It's all about technicals, okay? It's the first NFP, so euro dollar, it's the first NFP of the year. It's obvious that it's going to be good news in the favor of dollar. Remember that they do this in their favor. I do agree with you in regards to the fact that the first NFP, if it's strong, it could suggest further push to the dollar. But we need to see that happening. We haven't seen that happening yet. What we see is a selling the dollar into the last day of the week. So theoretically, what you're saying is indeed correct, but we need to see it happening. We need to see. So remember, trade what you see, not what you think. So we need to have confirmation. We need to see the dollar going back above 105 in order to suggest that dollar will get stronger again. Okay. Hope you guys are good. Welcome, Ewan. Newbie here in Forex trade. Hope someone can help. You need to start from the basics, I'm afraid, Benji. You need to go through, study a bit, go through the fundamentals, go through the basics in Forex. Can you let us know where are you, which country? Because we are starting a 1 week session, free session, 1 week, Monday, Tuesday, Wednesday, Thursday, Friday for new clients. I mean, not only clients, I mean people that they are new to the industry. So I don't know where you place in the world, but you might be able to participate in those events. Are free anyway. There are some requirements that you need to have, but they are free. I mean, we'll not charge you for that. So yeah, you need to start from the basics, I'm afraid, to the very, very basics. What is trading, what affects the market, and etc. Gold. What are you saying there? Down to 1827 and then boom. No, it's quite strong. Overall strong. Overall strong. Okay. Guys, you're giving a lot of signals. Are you sure for what are you saying? Whatever you're saying? I cannot tell you whether to sell or buy, my dear young King Ken. But what we have seen is that the dollar yen has found the floor, failed to break my 133 level, which is a key support for me at least. You see, found the floor, didn't break the 50-day period moving average, didn't retest the 133 level, which is a round psychological level as well and a round number. So we found the floor above those two crucial support areas, support tools, the 50, the Bollingers, the round 133 level. So we found the floor. So that could imply to a return back to 134.60 level because MACD is still positive. RSI is ready to recover again. So that seems to be a limited move, a faded move. Yeah, when all are giving signals. I don't like following what the others are saying. I prefer to take my own decisions, dear Clara. I prefer to check my charts and try to understand what I'm seeing and take my own decisions. So yeah, don't be blinded and follow what the others are telling you. Check your charts and take your own decision based on your understanding, your perception, what you see, not what you think, by the way, what you see, what your candles are telling you, and etc. Go, wait for sales now. We set the USA 100 That should come down a bit. Yeah, you see, it seems that it was just excitement, guys. It was the very first impression before the markets actually read again what the NFP means. You see, even Nasdaq is cooling down again. It's turning lower because the pushing stocks higher, since we have a strong NFP, it doesn't make sense. It was just the volatility of the news, of the new release. That's why Nasdaq is turning down again. So just for the sake of some scalpers, if we have any scalper here, etc., a move below the mid area of this candle, so below 10857, could imply to a return back to the floor of the week for Nasdaq. The same stands for Dow Jones, my dear Molitane. Aussie for my dear friend Billy. Aussie, that's Aussie yen. No, I need Aussie, not Aussie yen. Aussie. Here we are. That's the weekly chart. I need the 1 hour chart, I guess. One hour chart again. Push higher on the weak dollar and it turning back down again. MACD remains negative, but is really close to zero. So not a strong bearish signal. RSI at a 52. Stochastic, it had a bullish cross. So it is okay. So we have a really mixed condition over here, my dear Billy. Very mixed signals. We have a neutral MACD. RSI turned at 50. Stochastic shows push, bullish, and the price action is a bit dodgy. Not really exciting over here. So what you can do is just put your support and resistance levels and just monitoring whether it will break this range. Because what we are the impression that the Aussie is showing to us right now is consolidation, that they will continue bouncing between not 67 and not 68 level. So not really exciting over here. You see, even the Bollingers have flattened. If I zoom in a bit, you see this line, the gray line, flat. No, it's consolidation, the theme of Aussie right now, at least in the 1 hour chart. Let's see the daily chart, since we are in the very last day of the week, right? So let me clear this mess. Plain table. Okay, perfect. Where's my daily? Okay, here we are. Yeah, that's the case. That's the case. It's in a channel, but a very narrow one. Okay, hovering around within the not 68 level. No, I'm afraid it's a consolidation remains for Aussie Billy, dear Billy, and the fact that 50-day moving average, 200 are getting squeezed. They're really touching, ready to squeeze the price action, could imply to further sideways or consolidation mode for the Aussie. But it's like something like a triangle, not a descending triangle, a triangle. So what you can do is add these trend lines on and monitoring the asset every time that is rebounding away from the bottom of the triangle. So if it's rebounding away from the bottom, that means that it could retest the upper area of the triangle. So that brings us somewhere around 0.6870. And then, every time that is pulling back away from the top of the triangle, we could see it turning down to retest the bottom of the triangle. Hopefully that helps. I had a really bad day this week, these weeks. Muhammad, risk management. And if you had a bad day, okay, I mean, if you open multiple positions and you're seeing that if you fail one, you fail again and again and again, stop, close everything, don't trade for the remaining of the day, and come back on Monday with clear head. Because if you keep pressuring yourself, you might keep failing because you're not emotionally well. I mean, you're anxious because you lost, or because it wasn't a good day for you, or because you had some decisions that weren't correct. So it's better to stop, close positions, and come on Monday with a more relaxed mind, and calmer. Okay, psychology is key. Dollar yen, we've seen that. Oof, a lot of questions. We've seen dollar yen. Silver. Okay, someone is asking about silver. Silver it is then. Let me find it. Where is my silver? Silver. Yeah, I don't want silver and euro. I want silver, dollar. Oh, here it is. Silver. Ooh, that's interesting. That's very interesting, Jason. We have a break of the channel. We have a break of the channel that is something that we haven't seen since October. Very interesting, guys. Very interesting. I'm gonna add it on my list. Okay, so you see, breakout yesterday outside the regression channel, a bit of a push. Oops. The asset, after breaking outside below the channel, recovered losses today, but it hasn't really confirmed a return back to the channel. So Monday, it will be interesting to see whether it continues to move down, okay, or whether it has returned to the channel and it will continue this upwards trend. Based on the momentum, this seems to be, considering the bullish momentum in MACD, consider the fact that RSI is holding despite this slight decline, the fact that it's holding above 50 for 1, 2, 3 months, okay, it might suggest that the asset will return back higher to continue the upwards channel. But for the time being, we don't have confirmation. We need to see the asset turning back within the upper channel. And furthermore, we need to see it turning above 24 level, 24.40 or even 24.50, somewhere here in the previous resistance areas. So a turn within the channel, back within the channel, and a move above 24.50 will be a confirmation that the silver will continue this upwards trajectory holding since October. However, if today post a negative session and on Monday we see that it extended further down, that could be the beginning, or that could imply to the continuation of this 3-day pullback that we have seen this week. So very interesting for Monday. Thank you, mules. Anything you need, we are here to help. You mean to join, actually, to allow you to enable your camera and to have a proper discussion? This is what you mean? I'm not quite sure what you mean. They become bullish. Which one become bullish? Silver? Are you referring to silver, Jason? I'm lost. Gold. Oh, you're referring to gold. You're referring to gold. Where's my gold? Where's my gold? Let me bring my gold back up. Yeah, gold. Yes, you're right. Yes, you're right. By the way, just to clear this mess a bit for you and show you something very interesting, I have used double channels, double regression channels in order to get more support and resistance levels, multiple support and resistance levels. So that's a daily chart for gold. We had a drift yesterday, but it held gains and it pushed back higher again. So momentum is still bullish. You can see MACD, RSI really good at 62, holding above 50 since, I mean, for a few months now. Yeah, since November, beginning of November. So yeah, the overall outlook for, and especially after this golden cross of 50 above 200-day moving average, that implies to a bullish outlook for gold. Yeah. Okay, cool. The US ISM services PMI show a more clear direction for the Fed, for the dollar. Yeah, they could definitely help, but to be honest, it needs to be a really, really massive surprise because uh, okay, so let me just bring the calendar again back. Okay, let me bring the calendar back. So my dear, very good question, very, very good question. So ISM services, okay, let's take the overall reading over here. ISM services PMIs expect at 55, so they are held above 50, above the neutral level. So if they missed, okay, they missed, that doesn't, so it depends how badly they will miss. Okay, even though I don't believe they will miss because it's for December. December is Christmas, it's New Year's Eve. Services should increase in December, tend to increase in December. So a positive reading, okay, which suggests growth, that's another reason for the Fed to increase interest rate hikes, because another reading, even though it implies that that's good for the economy, but on the flip side suggests an even greater or higher inflation. We don't want higher inflation. We want to control inflation. We want to bring it back to normal. Because guys, higher inflation implies to higher living costs, higher household spendings. I mean, implies to um, uh, cost of living, higher cost of living, but at the same time, we are seeing lower salaries. So that's not healthy. Fed and every central bank needs to bring inflation down. Okay? So a higher than expected ISM service PMI, if we didn't have a global recession, if we didn't have a high inflation, that would be good. I would say if we weren't in a global recession with a really, really high inflation, that would be good for the ISM services. The higher ISM services would be good for the economy. But in this case, nowadays, where we have massive inflation, really high inflation that takes us back to 50 years ago, that's not good. That adds further to the risk that we could see the inflation persisting higher. Okay, but at the same time, having less in our salaries. So that's not good. So that adds to the hawkishness of the Fed to increase interest rate hikes until they manage to bring the inflation down. So, my dear friend, very good question. My dear Sibusiso, higher ISM services could add further pressure to the Fed to increase interest rate hikes. So that could push dollar even higher if the market participant starts to price in again further interest rate hikes. So I'm referring, understand? I'm saying the overall picture. Now, at the time of the release, whether we're gonna see the dollar moving down until it eventually comes up, I don't know. But the overall, if we see rising services, that could, and since it implies to further rate hikes, that could push dollar higher for January. Do you get what I mean? No one can tell you how the dollar will react at the time of the news. That's scalping. Okay, so if this is what you need to go to the 30-minute chart or 15-minute chart and just do some technical analysis, find your support and resistance levels, and put some pending orders on something and say, okay, if it comes, we had a pullback over here, okay, we have weakness, so next area to be seen is the 1841. If that breaks, then next support 1834. So I don't know how the dollar will react on the time of the release of the services, but I'm telling you the overall, what the data means for the overall outlook for the upcoming days and weeks. Okay, are we clear? Euro dollar goes up. Oh, that was ages ago. Now you see, it was a limited bounce because I told you guys the boost of euro dollar higher wasn't making any sense. It was just the excitement of the NFP release, nothing else. The data were strong. That suggests higher dollar, not lower dollar. This is dollar, by the way. I'm bringing you back to dollar. We've seen dollar yen. Where were you here, Michael, when we were seeing dollar yen? No, you came came at 4 o'clock. Okay, so dollar yen, after this drift on the NFP release, now the dollar yen comes down a bit, found the floor, and considering that we found this floor, a move above the mid of this candle, the mid level of this huge candle. Okay, so a move above 134, because I remember, because I did it earlier. So measure this, measure this candle. So a move up again above the 134 level could imply to a return back to the highs of the day and the week, and even back to 135, 136 area. But we need to see the asset turning above 134. 134 is not only the middle of this candle, is also the 20-day moving average. So a move and a closure above it could retest the 200-day moving average at 134.90. Okay, you with me? What happened? NFP was positive, but dollar is weak. It was just the immediate reaction. Okay, so guys, it's better to, if you're not a scalper or someone that is trading in a 15-minute chart or a 5-minute chart, so it's better to wait the markets to cool down a bit, okay, to calm a bit before taking any decision to enter the market. Okay, so that drift was the immediate reaction on the NFP. But since the data are strong, that implies to a move higher for dollar. But we need to see that in practice. We need to see that in our charts. So we need to wait to have confirmation. Okay. So floor, key floor, my dear Michael, at 104.60 and key resistance at 105. We need to see the asset turning above 105 and keep rising above 105 in order to believe that dollar will continue moving higher, will continue this bounce that we have seen since the end of December. We've seen gold, silver. Silver is very interesting. It's something that I have added in my watch list for Monday. We had a fall outside the channel, but a return back within the channel that could imply to continuation of the upwards trend, because MACD is really, really positive. RSI holds above 50 for more than 3 months now. It's in an upwards channel, so a return within the channel and a move above 24.50 could signal the continuation of this trend, of this channel. Oh my God. What's that? My dear friend, my dear spammer, I'm gonna block you. Yes, I mean, we can have like this where you invite me to join you on your live webinar. Oh, I need to, Miles. I really like that. I would love to. But I need to make sure that the company is okay with it, because sometimes it's quite risky to enable the sound and the camera, because there might be people that are not so serious. You get what I mean? Yes, but I will ask. Either way, however, if you need any further assistance, me and Stuart, we could have a call. Okay, we could have a private call. Are you referring to cotton by saying cot? Oh, what I'm saying also, so you're referring to the commitment of traders. Yes, occasionally, yes, because I want to, especially now that, Miles is referring to the commitment of traders, okay? I don't know how many of you are familiar with this report, okay? But this report, guys, it's quite interesting. It's very, very interesting, actually, especially for investors and traders. It's a weekly publication that shows how all the different participants in the markets are, what kind of position they are holding. It shows the holdings of all the different market participants. So, for example, this is something that is available in the actually it's available in many different websites. I tend to check the CME group, but yeah, this report pretty much presents how the retail sales are placing their positions for euro, let's say, how the dealers are placing their position, whether they are long or short or neutral, how some of the institutional players, and etc. So it gives you a long-term view of the market. I mean, for a particular asset, depends which asset you're interested in. It's very interesting to study how that report could help you. Yes, I occasionally check in, my dear Mouse, but because but only for preparing my outlook for the 2023. I mean the long outlook, the year outlook, or for checking the monthly outlook. For my intraday analysis, I don't do that. I don't need the code for the intraday diet. So it depends what the clients need. Yeah. Yes, I will find out whether you can join me and send us an email, by the way, at webinars@8hfm.com. So as soon as I find out, I will let you know. Yes, okay, we'll go over gold once again. And if there are no further questions, guys, I'm gonna call it a day because I'm already an hour and a half here and I'm a bit tired, okay? So if there are any further questions, now is the time to tell me, okay? Like Labogang did. Gold, you want gold, for sure. So, first of all, as I said, my dear Lebogang earlier, gold, this is a daily chart, overall is in a bullish outlook. Why? You can see that it's in an uptrend since the end of November. Bullish cross of moving averages, bullish MACD for 2 months now, 3 months now, 2 months now. RSI holding above 50, ignore stochastic because it's, I mean, in a daily chart, not the intraday chart. RSI above 50, holding above 50 since the beginning of November. So an overall upward, a bullish outlook for gold in the daily chart in the medium term. Okay, all these signals imply to further appreciation of gold with resistance at the 1850 and 1862. A break above that could extend the gold further to the upside. Now, in regards to the intraday basis, we have seen rebounding, boosting higher, breaking, peaking at 1853, 54 at the time of the release. But if we consider that the numbers implying to a strong dollar, that's why we might have seen already the gold turning lower again. So based on the data, we could see the gold turning a bit lower for the day at least. So key support intraday for the time being right now is the mid of this candle. Let me be precise. Yeah, by mistake, but I did it correctly. So 1843 is the key support. If we see this candle or the one that follows, let me put the 30-minute chart. Okay, you see, if we see the price turning below 1843, then that could imply that the gold would return back to the lows of the day or even the lows of the week. However, what is interesting in the fact that RSI, regardless of this pullback, RSI remains above 50, MACD remains positive, so that means that there's a big fight from bulls as well. So what I'm trying to say, keep an eye on the 1843 as a floor and resistance, the 1852. A break of 1842 could bring the asset down to 1834, while a hold of the asset at 1843, that could imply that it could retest again the 1850. So keep an eye on gold. Overall, the medium term remains in a bullish outlook. Now, in regards to the intraday basis, is what I said. It cools down a bit. A break of 1843 could bring it down to the day's floor. Okay? Okay, guys, since I don't have any further questions, I'm going to call it a day. I got a bit tired. It's a Friday anyway, so you need to be extra careful because people are cashing out, they're taking their profits. So that might be also the reason why we've seen initially at the time of the release, the dollar to drift. Okay? Because people are closing positions in order to reposition, to open again position, to get prepared for the week ahead. It's Friday. We've seen a lot of taking profit. We're seeing a lot of repositioning ahead of the new week. That's why this drift wasn't in line with the data. Okay? So take care. Risk management. Okay? Oh, Michael. Okay, I'm gonna do one more question for Michael. The pound. It's true that we didn't touch pound today. You're absolutely right. So I guess you are referring to the immediate to the intraday basis, my dear Michael. Okay, the UK economy is doing awfully bad. Okay, so okay, well, what we have over here? A a pretty soft pound, ranging the last 2 months, squeezed. Let's show you something. Squeezed between 50-day and 200-day moving average. But yesterday we had a break of the 50-day moving average, which was supporting the asset. And today, very, very dodgy, that's the daily chart, very, very dodgy candle with a lot of indecision in this final day of the week. So, why I'm telling you all this? So, okay. Okay, so I'm telling you this because this latest fractal over here, along with November's that repetition, that repeated floor, okay, here, is our immediate support area, floor. Okay, now will be a trigger point. A trigger point because if the asset extends below it, that could suggest the beginning of a new downtrend for a pound. For pound in the medium term, in the next few days, weeks, or even months. So you see that is as a very significant turning point. So you see MACD significantly down and at zero, RSI down, return down, and a key floor that if we see the asset turning below 117.50, that would suggest to the potential beginning of a new downtrend for the asset. So that's in the long term, okay? Now, I guess you want me to do intraday basis, okay? That's for you to have this line on, be alert, put some trend lines on, because it will help you in the next few days, guys, or even weeks. Okay, put some significant long-term or medium-term trend lines, support levels, resistance levels. They will help you. They will make your life easier. So another line that I will put is obviously on the 200-day moving average at 121. Okay, now let's get down to the hourly basis. What we are seeing, really negatively configured MACD, well below zero. So that implies lots of bears, lots of selling pressure. RSI, even though on this bounce, we have seen RSI aggressively turning higher, it failed to move above 50 and it's turning back down again. So even the intraday picture remains negative regardless of this jump earlier. And why I'm saying that? Because it's a clear limited bounce. It didn't manage to come or to break this double top over here. Can you see this double top? Double fractal exactly on the same price at 139, 1934, not even touching the 50-day moving average, and it's already turning back down. And a lot of bearish signals from the hour indicator. So RSI fails to extend above 50. Right now it's at 42, a pointing lower. MACD is well below zero, so it's clear. The asset fails to extend higher, turn back down again. So more negatives than positives. And even if I add all of my, if I add my other strategy, the setup, using also the fast moving averages, the stochastic as well. Okay, indeed, stochastic had a bullish cross, but you see the slope is not sharp. So and the red line is still at the low territory, at the low levels. So limited move, bearish signal, bearish signal. The moving average already flattened, indicating that that was a limited bounce. So yeah, negative, negative. So the next support for the pound is back to its floor, to its today's lows, my dear Michael. So guys, I'm done. I will call it a date, okay? Thank you very much for attending. Hope you're having a great day ahead. Thank you for your nice words, dear Thalia. If there's anything that you want me to change, you want me to present the live analysis in a different way, any suggestions are more than welcome, okay? So maybe you could email us with your suggestions at webinars@hfm.com, or stick it here. I would really appreciate the feedback on how we can improve our lives in order to help you. Okay. Now, thank you very much. Have a great day ahead. Have a great weekend ahead.